Uncertainty peaks ahead of tonight's interest rate hike announcement, and analysts say Bitcoin has entered its deepest and darkest phase. You're watching the Daily Brief with Forbes. I'm Ramia Farrage. Uncertainty is at its peak ahead of tonight's Federal Reserve meeting, with commentators speculating over increments of 50 basis points, 75 basis points, and even 100 basis point rate hikes. Parts of the U.S. yield curve remain inverted, signaling concerns that restrictive monetary policy will lead to an economic downturn or even a recession. Fears of stagflation have driven stocks into a bear market and triggered a sell-off in bonds in recent days. The bear market for Bitcoin has entered its deepest and darkest phase, with even long-term holders coming under extreme pressure. That's according to analysts at Glassnode, who track an indicator known as realized price, which is the average purchase price of all Bitcoins in circulation. The crypto is currently trading well below the coin's current realized price of around $23,000 after a 9-day fall. It's down 30% over the month. Bitcoin traded in the $20,000 range this morning. Bill Gates has dismissed cryptocurrency projects like NFTs as shams based on the greater fool theory. Speaking at a conference, Gates sarcastically said, "Obviously, expensive digital images of monkeys are going to improve the world immensely." Gates has criticized crypto before, commenting that Bitcoin is too risky for retail investors and causes harm to the environment. Washington will continue to allow payments to Russia for energy products through to December 5th to give Europe time to prepare for a near-total oil embargo. The exemption from devastating U.S. financial sanctions was due to expire on June 24th. The renewed carve-out will align American regulations with the implementation timing of the EU's ban on Russian crude. The EU agreed to halt the majority of Russian oil imports, but exempted crude delivered by pipeline. China's factory output and retail sales remained weak in May, with tepid demand and lingering COVID restrictions putting a damper on growth in the world's second largest economy. Retail sales sank 6.7% year-on-year in May. That's still an improvement from April's 11.1% drop. It was the third straight month of contraction in retail sales. Industrial production was up 0.7% after falling 2.9% in April. The urban unemployment rate ticked down to 5.9%. Shanghai's lengthy COVID-19 lockdown pushed a quarter of U.S. firms in the city to cut investment plans and nearly all to drop revenue forecasts. The American Chamber of Commerce Shanghai survey found over 90% of U.S. companies cut their revenue projections for the year, with a quarter expecting revenues to be more than 20% lower than projected. Nearly 25% of companies surveyed have cut their plans for investment in Shanghai. Shares in the management agency of the K-pop supergroup BTS plummeted today after the band announced they'd taken an indefinite break. The 7 members, credited with generating billions of dollars for the South Korean economy, dropped the bombshell during a dinner celebration marking the group's anniversary. The news sent shares of the band's label HYBE tumbling down 27% earlier this morning. Fossil fuel giant BP is taking a 40.5% stake in the $36 billion Asian renewable energy hub in Australia. It's an array of solar and wind facilities sprawled over 6,500 square kilometers, with an expected generating capacity of 26 gigawatts. This exceeds China's vast Three Gorges hydroelectric dam, the world's largest existing power station. It would also produce 1.6 million tons of green hydrogen annually, with plans to export to major Asia-Pacific markets. The newly released 4th season of Netflix's Stranger Things has officially become the streaming service's most watched English-language series ever. It broke a record held by the 2nd season of Bridgerton in less than 3 weeks. Over 781 million hours of Stranger Things 4 has been viewed on the platform since its premiere on May 27th. I'm Ramia Farrage. This is the Daily Brief. Thanks for watching. Bye for now.